Welcome back. You're tuned in to Barsad Morning Call here on CNBC-TV18. We've listed all the stocks for you. Let's get some fundamental views as well going. Dipan Mehta, Director of Elixir Equities, joins us on the show. Hi, Dipan. Good morning. A rainy morning here in Mumbai, but plenty of stocks to track. Let's start off with the banking space. In Axis Bank, the asset quality issues have come back, and that's a little bit worrying. Though the street was bracing for a weak set of numbers, actually. What's your view on the stock? In all probability, it opens up in the red. What do you do from there?
Oh, yeah, Nigel, good morning and thank you for having me on your show. Yeah, disappointing set of numbers from Axis Bank, and even at the pre-provisioning level and at the net interest income level, I was a bit disappointed. But look, that's all in the price also. The stock is trading at a very cheap price to book, price to earnings multiple as well. So that will prevent a further downslide. But yes, I think across the board, so far private sector banks have disappointed. Axis Bank, Kotak, HDFC, all have fallen short or slightly short of market expectations. And they're all constrained by liquidity issues because the way the deposits are not growing on one side and they have to pay higher for those deposits, that's having an impact on their margins. And the base effect as far as provisioning for bad loans, that base effect is so low that any further increases is leading to a sort of a hit on the net profit. So I guess this is a passing phase. And maybe 2-3 quarters down the line, once liquidity improves, you may see an improvement in their earnings. But at these valuations, doesn't make sense to sell because at the end of the day, they are great long-term secular growth stories, given that the franchise and the brand and the risk management systems will come into play when things improve.
Okay, Dipan, hi, good morning. What about L&T? How did you read into the numbers and, what is the recommendation for investors now?
Yeah, Sonia, good morning. I think very impressive set of numbers from L&T. And look, L&T is a complicated company, so you need to just remove the financial services and the IT businesses and then look at it on a core basis. And on a core basis, they are done exceptionally well. Slightly lower increase in order book position, but I think they are being very selective when it comes to new orders. But the underlying growth momentum, the execution certainly has picked up. And what I like best is the composition of the order book and the revenues is getting more diversified, especially coming in from global projects, which is very positive and more sustainable. Valuations are rich, but here's a company which can steadily grow for next several years or so. And it's a nice large cap company, good corporate governance standards, very good liquidity. So if you to pay a little bit higher premium, I think it's well worth it. Having said that, it's a company in which we and our clients are invested in. So very positive on the numbers which have come through from L&T. And I feel that if you have a long horizon, like 3 to 5 years or so, this company can deliver very good returns.
Got that. One of the areas, Dipan, hi, morning, one of the areas which did very well yesterday, and I think on the day of the budget as well, it was insurance, right? So there was nothing negative. At the margin, there was a lot of chatter that something negative will come on insurance as well, nothing. So we got that past hum. But you also had earnings, which so far have been giving us an indication that it's sturdy. Valuations are kind of undemanding. Do you own anything in this space?
Prashant, only one stock, LIC, and I'm really eagerly waiting for their numbers as well, because I think this will be a good quarter for LIC as well, being the largest insurance company. And steadily, they have been getting into more and more profitable products. And I think that the way the stock prices have moved up, as and when they announce the adjusted enterprise value, you may be surprised as to at what trading multiple or what price to book multiple it is actually trading at and how much of a discount it is. It's a similar situation like PSU banks versus private sector banks, and we had a fabulous rally in PSU banks as they caught up with private sector banks, and something similar can play out in LIC as well. So very positive on that particular company per se, but I think if you're holding any of the other insurance stocks, HDFC, SBI Life, ICICI Pru, I think all of them are on a very strong trajectory, and I think they should deliver a decent outperformance, especially if you have the view like we are that the markets are kind of topping off and there could be a correction around the corner. I think insurance is a nice defensive sector to be in, as is the case with, say, IT or pharma.
Dipan, yesterday you had that sort of study, a SEBI study which came, right? Talking about intraday trading and how many people lose money, etc. You combine that with the fact that there is also, there's been anticipation of the regulator doing something after taxes on stocks, but on the F&O side, something, maybe a consultation paper, etc. is around the corner. Stocks like BSE, etc. rallied. BSE was up 8% yesterday. Angel was up 5-6% over the last 2 days. What's your assessment for the capital market segment. And you combine that with the fact that your view is that maybe things are topping out a little bit.
Yeah, that's right. I think stocks like BSE, Angel, they are very cyclical. And last 2-3 years, we haven't seen any depletion in volume on the exchanges. At the same time, I think the stock markets have continuously rallied, and that has attracted many new investors and traders. But look, we've been around for a long time, and this is just unsustainable. At some point of time, you will have a cool off. It could be caused by regulatory action. It could be caused by external factors, like look at the way the Dow and S&P traded yesterday. That's not going to help the sentiment for today. And end of the day, you have to consider the fact that markets are slaves of earnings, and earnings are certainly slowing down. So of course, liquidity is taking stock prices higher, but at some point of time, there will be a balance as well. So I would say that stocks like BSE, Angel, other stockbroking companies are best bought in bear markets when the earnings are also under pressure. But apart from that, I would like to stay away from this particular category and just wait and watch and see how things play out.
Dipan, I don't know if you want to add anything to that, but it's interesting, right? I mean, the times that we are in. So comment on that, but also comment on names like CG Power, where I think we've had numbers come through. There is acquisition as well. We'll be, by the way, joined by the management later. You had some of these budget-related stocks which continued to move higher. HBL Power was sharply up. HCC. I mean, there was that nuclear angle, and India, of course, is one of the few countries which is building up nuclear capacity in a big way. Borosil Renewables. You heard from PG Electroplast, which they've raised their revenue and profit estimates. Go on, Dipan.
No, I think that correction can be around the corner. It can happen at any point of time in a bull market. In past bull markets, I've seen 10-15% sell-offs also, and then pick up after that. It's just that we are seeing such a flood of liquidity coming in, so one can't really predict that despite such high valuations, there is no serious correction, but we could be surprised on that count as well. But by and large, I think there have been very few outliers in this earnings season, and there have been a lot of disappointments. Also, the companies which you named, like HP Electric and CG Electric, these are all, end of the day, very cyclical businesses. And now they have a superb upcycle, no doubt about it. But you cannot pay such huge PE multiples for such businesses, I think, which are not really secular over a longer period of time. And I think like to be a little bit underweight and a bit cautious in the markets.
Okay, all right. Thanks a lot for that, Dipan. Wishing you a good day ahead and look forward to chatting up with you rather soon.